So today, I'm going to give a small sharing session on trade for living, which this is what I'm doing for over 20 years already. Okay, first of all, I would like to make some disclaimer because this session is purely organized by IG, but whatever I presented here is solely my own opinion and doesn't represent IG's view. So do your own due diligence because this is purely for education purpose. I'm one of the trader who is very shy, which I always trade high in the mountain. I like to trade on my own. So you don't see me a lot of places. I don't appear in many seminar sessions. And for IG sharing session, I think the last time I share was in March last year, 22nd of March. So it's almost 1 year already. And this is the second time I share uh, with IG client, which is today, this evening. 1 year ago, I shared about navigating world indices, which is what I'm doing every day. And today, I'm going to share with you how I trade for a living using what I'm doing, trade the indices. So a small intro to myself. Allow me just to introduce because I think there are many of you who never see me before. Because as I said, I hide in the mountain to trade, so you don't get to see me very often. I work with financial company for over 20 years before I turned full time. Since I graduated, I work in a financial company, including sovereign fund manager and also some top tier forex broker. From 1984 when I graduated to almost 80, 90, almost 20 over years. Then after that, I joined the CIMEX, which I'm the pioneer batch for electronic floor trader. So that time they just converted from the physical floor to the electronic floor trading. So then since then onward, I just purely trade on SGX derivative products. And I'm also the pioneer expert advisor developer. I develop a lot of auto trading system because my background is computer engineering. So I do a lot of computer programming and all that. And using all the trading system that I developed, I have become one of the top 10 signal provider for Zuru Trade Copy trading service in year 2010. And my best achievement was 700 over percent in 1 year from May 2013 to May 2014. So I become full-time trader since from 2005 onward for over 19, 20 years now. And I founder of a turning point system in year 2015. And I have conducted quite a number of courses. My students including Singapore, Malaysia, Hong Kong, Philippines, Indonesia, Thailand, Japan, UK, and US. And also a guest speaker frequently invited by various working houses and trading community. So I would like to share a little bit on my trading journey. And also this is what the new trader often they will encounter. I believe that many of you will have these few stages when you just started trading. So when I first started, okay, same as many traders, we go to stage one. At stage one, we don't have any idea how to trade unless you have gone through some trading school. Otherwise, when you started, you have no idea how to trade. That's how I started. No idea how to trade. Then anyhow trade because trading is quite easy. So long you got a platform, you can put in order buy or sell. You anyhow trade. Then you can anyhow make money one. Every day suka you buy or sell also can make one. Then anyhow lose money also. Anyhow click, anyhow make, anyhow loss. And usually, normally about 2 weeks or 3 months, you can burst an account easily. Anyone had this experience? If yes, can you type a yes? Yes, can you raise a hand? No? Wow, all professional trader. Okay, I'm very lousy when I started at stage one. But when I started the time, what makes it going is, first, I make a lot of money, anyhow make money. Then after that, slowly, anyhow lose money. Then I go to stage two. Stage two, I encounter big drawdown. Wow, that time getting scary already. Because once you make more money, you make more, increase your lot size, you increase your capital, and you whack the market. And then at some point of time, you encounter big drawdown. This one no issue one. Anyone have encountered big drawdown? Yes. Raise your hand if you are here. If not, you type a yes. For those who are attending webinar. Yes. So this is inevitable one. In any trader, when you started this trading journey, definitely you encounter at some point of time you encounter one very serious big drawdown or multiple a few times big drawdown. Inevitable one. Then after you encounter big drawdown, then you realize, hey, actually you must do some homework one. There's some homework to be done in order if you want to make profit. So after that, started to have proper trading journal. You record down your trade, do a trading journal, and review it weekly and monthly. To keep it going, you have to go to this stage two. Then you go to stage three. Stage three already, more hardworking. This time really work hard. Must make more money back already. Whatever you lose in the market, must try to make it. Then stage three, you read a lot of trading books. Okay, there are a lot of attended many trading courses, study a lot of strategy, join many trading forums, follow and invested many copy trading system. Anyone invested in any copy trading system? You put in money in the system trade for you, or the trade you follow the trader, you put in the money in the trader trade for you. No? Yes? Can you type a yes? Oh, you all never heard of this copy trading system? Yeah. Okay, then you're lucky. Then it's okay. Then you go to stage four. Suddenly, okay, now I wake up already. I realize that actually, just any simple trading system can make money one if you focus in how. And you no need to have many complicated strategy. And you just focus on risk management and trading psychology. And focus on one or two simple strategy. You consistently making use of it, you can make money on. So you come to this stage four, then actually you can start to make money already. After that, you fine tune it, go to stage five. You develop your own trading system because whatever trading system you learn, you have to fine tune it a little bit so that with your own fine tune it with your own personality and risk profile. Then you are able to accept that it is not possible to win every trade or win every day or every week. And it's only a probability game. When you put in the trade, you have to calculate this is a high probability winning or this is a not so high probability winning. So you know that every trade you go in, if you don't have any trading system, don't have any edge on your strategy, your winning rate is only 50-50, 50% chance of winning. Then you go to stage 6, which is the last stage now. Trading, it becomes very normal, just a normal and simple and boring daily routine. Which what I'm doing now, quite a boring, but it's okay. This is a daily routine, daily pattern which I'm doing it. Every day, just plan the trade and you execute, follow the trade plan. And when you come to stage 6, it's become a daily routine, no more excitement already. Every day, okay, just do it, no more excitement. But you become part of your nature that you will continue doing it. And normally only 5% of the trader will reach stage 5 or 6. So this is quite a small percentage over long term, to be very frank. Then let's see, you want to know what's my daily routine, what I do every day? I'm a very early morning one. Every day, no need alarm clock one. I can wake up about 6:30 or 6 plus. Then I start to plan my trade around from 7 a.m. After I make a cup of coffee, I get ready. Then I will identify the market I want to trade. I will check whether it's a swing trade direction. Identify what is a swing trade direction. Swing trade means that it's an overall momentum over a few days, from the last few days or the next few days, whether it's uptrend or downtrend. or it is a sideways consideration, because there are some days they are into the sideways consolidation. So I will check various indices. Then I will identify what is a potential day trade entry opportunity. So whether the certain index I want to trade, whether there's any good opportunity for me to enter the trade. And then I will post in my inner circle trading group where I have my student group. I'll post it there. And also I provide some signal subscription. Then I will start my trading routine. I will do from Nikkei first, which is Japan index, ASX Australia index, and the Taiwan index, Simsky, China A50, Hang Seng. Then in the morning, usually I end around 10:30. So 3 hours routine is quite good enough for me in the morning. Then I'll have my lunch break and tea break. Then I come back in the afternoon trading around 3 p.m. for German DAX and ends around usually 4:30. Then at night, normally I don't really trade unless I identify a good trading opportunity for Dow Jones, Nasdaq, or S&P. Because if I engage the market, it will end very late. It will end around maybe 11:30. So to me, I'm actually a morning trader, as I said. So that's why at night I prefer to rest unless I see some very good opportunity. There are some day, as a trader instinct, it will just appear, especially after I trade in the morning for the index and also the afternoon. So from the morning or afternoon, roughly I know whether there's any good trading opportunity. So consistent profit from day trading. Are day trading and swing trading difficult for retail traders? Those people, if you think a yes, you type a yes. If you think a no, you type a no. Is it difficult for the audience here? Yes, can you raise a hand? Is it difficult? What, the rest all making money? Not difficult. Actually, it's not difficult. But to some it's difficult, to some it's not difficult. As I said, the last 5%, you must be the last 5% already when you say not difficult. Congratulations, you have reached the last 5% of the trading pool. 80% of the traders fail to make consistent profit. We are talking about consistent profit. We are not talking about some big profit. You whack the market, you can win one or two. Many traders can do it without problem, but not many traders can be consistently making consistent profit. So I try to analyze what are the major issues. The major issue usually in this category, the capital is too small. I mean, you put in very small capital, but your lot size is too big. You put in too big a lot size. This is relative to your capital that you put in. So usually this is a major issue. Then second issue is you don't have a proper trading journal. Fail to review. Even you have a trading journal, but you fail to review it and you did not make any correction. So with the trading journal, I have a lot of students. I ask them, do you have a trading journal? Some say yes. Then after that, do you review it? No, not many review it. So you have a trading journal, you have to review it. Otherwise, it's as good as you don't have any trading journal at all. Even you review it, you must make correction. Make correction, that means you focus on those failure traits and go and identify the issue. Then you make a correction. Then you can improve it. Or you not enough discipline or personal time constraint. Because especially if you are working or you have some family commitment, you will not have enough time to focus on the market. So if you don't have enough time to focus on the market, my advice is you do a very simple trading system, which means that you do a swing trade. I mean, one day you spend only about 5-10 minutes just to identify the market direction. Is it going to be uptrend or downtrend? So you just continue to hold the buy position you have seen an uptrend, or you don't trade at all totally. So if you are personal time constraint, don't try to do intraday trading. Only focus on swing trading. When you are doing swing trading, you only need to spend 5-10 minutes a day. Don't suka go and look at the market again. You must be very disciplined and no trading system with an edge. So what is a trading system with an edge means that you must have high probability winning. Meaning over a period of time or over a number of trades, you must be winning. And also no trading community to support each other. Because trading could be quite alone, especially if you are trading at home, not in a trading pool, not in a trading desk. So you're trading at home, you basically only have four walls and a computer. So it's quite boring actually. Then unless you have some trading community, at least you have some peer you can chit chat with each other. Hey, how is the trading today? Why you make money? Why I didn't make money? Why I make money and you fail to make money? So these are sometimes you can help each other, especially when you're new. So you know that whether you are putting in the right trade, in the right strategy. And the last one is wrong choice of trading instrument. Because based on your personality and the strategy, if you apply to the correct instrument, you can make money. But you apply to the wrong instrument, your result may not be that good. Although you still can make money, but then if you choose the correct instrument, then you can make more money. So we focus on what is mean by instrument, correct instrument. When you are trading, these are the few instruments that you can actually focus on. You can do stock, bonds, forex, cryptos, commodities, indices. So I started with all this, and then my main focus, and I do day to day, which is very frequent, is indices. It's one of my bread and butter that I'm doing it every day. So the rest of it, maybe just a quick one to share with it. It doesn't mean that everyone will do this thing. It is just that more for general interest. This is only my personal view. Can you comment a trading community to join? Okay. So why I avoid stocks? I actually started to trade stock, including Malaysia share. I am a big punter when I started that time, in 1990 until 1998. So there's this thing called CLOB, Central Limit Order Book. It's formed in 1990. It's a secondary market in Singapore that allow us to trade Malaysian shares. But then when the financial crisis came in 1998, Malaysia authority suddenly suspend all the trading activity. So those Singaporeans who bought the Malaysian share all got locked out. There are about 180,000 shareholders, including myself, holding total of 4.3 million in Malaysian share listed in CLOB. So we either sell it back at a big loss. Our loss is very, very, very big, 70% or 100% total loss. Because many shares at that time all suspended or bankrupt already. So there's no more value. You want to sell also no value. But then a lot of shares you still can sell because there's a time they give it to you. Right, within these 2 weeks, if you don't sell, all your share will be suspended. So we resulted a big loss. Then another big issue, if you know this guy called Nick Deason, I know him very well because at that time he was in the fourth trading. So these two big banks, Barring Bank UK, formed in 1995, collapsed, burst, just because of one trader. He hold big position on the Nikkei. Then the other time, Lehman Brothers, also a big solid bank, financial institution, in September 2008 also collapsed. So even big bank also can collapse over 30 years, 100 years. Then the latest one, I think that if you can remember, around March last year, 2023, around March there, a lot of US bank, big issue, Silicon Valley Bank, Signature Bank, First Republic Bank, including Credit Suisse and all that bank was, they all suddenly all collapsed. So I tell you, if you trade stock and you're not careful and you don't follow it, one day you can just go into suspension and your portfolio missing. So even the stock that I'm holding, if I don't look at it after 1 year or 2 year, I look at it, the name disappear. Either it changed name or already suspended. So you move to crypto. Why I avoid crypto also? Um, how many trade crypto? Those who trade crypto, can you type yes? Any one of you? Any one of you have heard or put the money or put your crypto in FTX? This is quite a big one. That time, in around 2022, uh, those who trade crypto, most likely you have some crypto currency you put in FTX, including myself. But I liquidated quite early because I'm not really like to hold cryptocurrency. So this FTX collapse is a big issue because a lot of Singapore investors, they all put hold, because when you want to buy or sell cryptocurrency, let's say you want to buy a Bitcoin or you want to buy Ethereum or you want to sell, so you have to go through some crypto exchange. You cannot go to XJ exchange and all that because those are not the crypto exchange. So the most solid one at that time is FTX. Even Temasek who have some certain percentage of shareholding. So it's quite reliable. A lot of Singapore investor holding it, or block fee or liquid. So these three are Singaporeans popular at that time, and it can just collapse, suspended, bankrupt overnight. Even how, no matter how solid they are, of course there are some like silver gain and all that. So that's why even crypto it is also quite dangerous if you want to hold for long term. But now again, I think that all forget about it already or already resurrected. Now a lot of crypto exchange, a lot of cryptocurrency is active now. And why stock index? Because to me, I have never heard of any single stock exchange that collapsed to zero value or suspended. So the only failure is the trader itself. You either over leverage margin trading, major cause of the failure, and it's not the stock exchange that fail. And why I like stock indices, because to me it's very predictable and it's always at opening and closing time. So to me it's like a normal working hour. I know that 7:30 or 7 a.m. Nikkei will start without fail unless it's a holiday. Then I know that 8:30 Simski Singapore Stock Index will start. It's very predictable. So at 9:15 a.m. I know Hong Kong Hang Seng Exchange is going to open. So before the market open, I just sit there and wait for it. So to me, it's quite predictable without fail. Then what is stock index? Indices, also known as stock indices, represent a value of a group of assets of stock listed on a particular exchange. So it tracks the performance of a group of stock that represent a particular country, market, sector, or industry. Provide a snapshot of the overall market performance, calculated using weighted average price of individual stock in the index. So normally larger companies and those with higher market capitalization have a greater influence on the stock, on the index. So what do I do every day? Wow, if you look at my portfolio, seems like a lot. I have a Nikkei 225 with Japan index, AXX 200 with Australia index, KOSPI 200 Korea index, South Korea, STI or Simski 30 is Singapore index, and TWN Taiwan index, and China A50, Hong Kong Hang Seng 50, German DAX 40, and UK FTSE 100, and S&P Dow Jones or Nasdaq Russell. So it seems quite a lot, but actually, to me, if you have a correct strategy, every index you only need about 5 to 15 minutes, you can finish your job very early. So how do I spend my time? So I look at it, 7 a.m. I wait for Japan index to open. Then 7:50 I wait for Australia market to open. 8 a.m. KOSPI. It doesn't mean that you have to take off, because if you have a correct strategy, when the market open, you just check any trading opportunity. No, you just skip, go to the next one. Yes, then you put in the trade. So simple as that. You no need to go through all market. You just need to stand by, wait for it, and then check any trading opportunity. Yes, you go in. No, you just skip and wait for the next market. So example like 8:30, I look at SIMSKI, Singapore Stock Index, future open. Trading opportunity, I just put in the trade. No trading opportunity, I go for my coffee break or toilet break. Come back 15 minutes later, 8:45, I look at Taiwan. Any trading opportunity? Yes, then I go in. No, no need. Then another 15-minute break. I wait for China A50 open. So it's easier. You can see that everyone about 15 minutes 15 minutes break. So if you are fast enough, you can finish your trade in 15 minutes. If there's no trading opportunity, you just skip and then wait for the next one. So my major one is Hang Seng, the Hong Kong one at 9:15, or German DAX at 2 p.m., or daylight saving start from 3 p.m. Just a little bit, because some asking me about trading Hang Seng, because I specialize in Hang Seng and German DAX, also Nikkei index. So Hang Seng in Hong Kong, they start from 9:15 a.m. to 12 p.m. And then there's a lunch break, 12 to 1. And then after that, from 1 p.m. to 4:30. And then there's a T+1 extended session from 5:15 p.m. to 3 a.m. So that's why when you trade a particular index, you have to know the timing very well. You don't start from 12 p.m. to 1 p.m. If you stare at the screen from 12 p.m. to 1 p.m., you see there's no movement. But if you use IG market, there's some movement. Because IG is 24 hours platform. So anytime you go in, the market is still moving one. But it's not a real market. So there's no point for you to go in. You have to know exactly very well what is the actual time the market is moving. So when the market is taking a break like 4:30 to 5:15 p.m., so during that time, you no need to trade the market. That's why you have to know the timing. Otherwise, you trade at the wrong timing. Even you have the correct instrument, even you have the correct strategy. But timing is everything. So the most active time, as I said, that I like to focus on is around 9:15 to 10:30 if you want to trade Hong Kong Hang Seng Index. And there are three types of contract, the cash, mini Hang Seng, and standard Hang Seng. And this one is universal. For all the intraday trader, intraday, that means you trade in the daytime or you close your position in the day. Same day, you go in the morning or you go in afternoon, you get out on the same day. And swing trader means you will hold the position over a few days. So if you're intraday trader, I recommend you to use cash contract. The reason is cash contract, the spread normally is smaller. So for smaller spread, you take profit faster. Okay. Then for swing trader, I recommend you to use a future forward month contract, because for future forward month contract, there's no overnight fee. Whereas for cash contract, if you hold overnight, there's an overnight charges. So that's make the major difference. So although the swing trader, your spread for the future forward month contract, your spread may be slightly more, but then offset by you don't have to pay overnight fee. And for Hang Seng, it's a monthly contract. It expires on second last day of the month at 4 p.m. So currently it's using February 24, which is this month's contract. And the last trading day is next week, 28 February 24. More reference, you can go to Hong Kong Exchange website, hkex.com.hk. So for German DAX, now they have an Asian session from 8:15 a.m. So you run all the way until 4:15 a.m. to 5:15, depends on the daylight saving. But the active trading hours, if you want to trade German DAX, you should focus on 3 p.m. or 2 p.m. depending on whether daylight saving. Currently, you focus from 3 p.m. 3 p.m. to about 4:30 or 5 p.m. So that's the actual active hour that you should look at. And daylight saving, every 6 months there's a time shift. Four types of contract: cash, micro, mini, and standard DEX. So again, same thing. Intraday trader, you use the cash contract because your spread is smaller. Swing trader, you use a future 4 month contract because there's no overnight fee. And for German DEX and US index, it's a quarterly contract, not a money contract. It may expire on third Friday of the quarterly contract month, around 6 p.m. or 7 p.m. So reference, you go to eurex.com for German DEX. So consistent profit from day trading. The only reason you start trading, I don't know what is your hobby. To make money or hobby to pass time? Okay. Can you type pastime or hobby or make money? Pastime. A lot of people pastime. Seriously. Okay, those who pastime, can you raise your hand? Boleh. Who said pastime just now? Who said pastime just now? Huh? For me, pastime. Okay, after a while, it becomes when you started, actually when I started, is to make money because it's to make a living. Then slowly, there's something is pastime, become a hobby also. Same thing like you go for a job or you're working for a job. When you started with the job, actually you want to make some income, salary, right, for your daily expenses, your household income and all that. But then the job that can last you very long, you must have your interest also. So after you work very long, it actually you go to office and pass time, but also make money. True or not? So that's why if you want to have a trading to make as your daily income, as your profit for your daily expenses, it has to be a hobby and interest you also. So to make profit in trading, there are only two types. You want to do day trade, intraday trader, or swing trade, or both also can. But normally you focus on either one. Because to mix around, you have to be very professional or you have to be very seasoned. Otherwise, you get your objective wrong. There's always some day trading or swing trading opportunity every day one. So if you have a correct strategy, if you know how to look at market, there's always some opportunity for you to trade every day. Usually about 15 minutes, maximum 90 minutes in half for most days for each market trade execution. So before I share some strategy, I want to make sure you have the correct mindset first. Correct mindset. First, is more strategy and more method equal to more profit? Yes, type a yes. No, can you type a no? Anyone say yes? Can you raise your hand? Oh, everyone know. Those who say no, can you raise your hand? Wow, many people don't agree. So actually, more strategy and more method doesn't mean more profit. Doesn't mean more profit. Key is not about technique or method, but the thinking process. Internalize it to become your own trading plan with proper risk management. Trading one strategy with discipline beats you 10 strategy without discipline. So that's why you want to trade. You have to trade with discipline, and one or two good strategy is good enough for you to make. For me, I apply for bread and butter strategy every day to have some consistent profit already. So have you ever thought of why studying and applying same method but all have different trading results? risk management discipline and experience. Uh, have you ever thought of it? Why study and applying same method, but all have different trading results? I always have this question for my student, especially when I have a group of new student. Some will ask me, how come my result, I use the same strategy that you teach me, but different from the guy sit next to me? So do you agree? Everyone applying the same method should have the same result. If you agree, can you type a yes? If you agree, can you raise your hand? Not agree. No. It's very simple. My answer to this is very simple. If you ever think of when you go back to primary school or secondary school time, so the teacher here, okay, I teach the same thing, same textbook, everyone, okay, everyone cover the same chapter. Then at the end of first quarter, okay, first semester, I give you test paper. How come everyone got different result? Some got A, some got B, some got C, some got D, some got F, some pass, some got distinction. But I teach the same thing. So this is exactly the same thing because everyone had different personality. Everyone had different learning attitude. Some put in more effort. Like I say, you put in more effort, you adjust it. You put in more effort in trading journal, you review it and you make correction. So that's why the same strategy, it doesn't mean that you apply, you can have same result. But more or less, if you follow very strictly, more or less, you should get pass at least if you put in some efforts. Cannot fail one because the method that we teach or we share is has some kind of proven statistic that it can make money one. So the reason is market is random. Different experience will give you different result in mindset. Maybe I share a little bit on this part. So let's say I teach a strategy, which is usually my strategy have a high winning rate. Let's say I have a win rate of 60%, and then assuming you put in a capital $2,000, okay, 60% winning rate means that if you trade 100 times, you will win 60 times. Okay. Assuming we are using 1-to-1 risk reward, that means you bet $1, you lost also $1. So out of 10 trades, winning rate of 60% means that you will win 6 trades. So you win, let's say first day you win, second trade you lost 100, third trade you win, loss, win, loss, loss, win, win. So you win 6 times, you lost 4 times, then your net, assuming each time you win is 100, you lost also $100, then your net win will be 200. Fair enough? 60%, right? 1, 2, 3, 4, 5, 6. You win $600, you lose 1, 2, 3, 4, $400. So 600 minus 400, you win. Net gain 200. So based on capital 2000, that means your return is 10%. So this is one way which is very normal day. Your market perform this way. So first week, the people come in, they will have this result. Okay, what happened second week? Let's say second week come in. Those people who are first week winning one is okay. But some will come in on the second week, because some just come in, applying the same strategy. So he win 6 times. Wow, market very favor to him. Market like him. First week win already. Second win, third win, 4 win, 5 win, 6 win. Win all the way 6 times. But again, I say this is strategy 60%. Then the next 4 trade happen to be lost. So you lost 4 trade. So the net result will still be the same, right? $200 net. Does it make sense? Correct? Yes, Agree? Agree? Can you type a yes? Your return is the same, 60%. Agree? You raise your hand. Result the same? Same, huh? Same? Okay. In realistic, in real market, when you are the first week, this kind of pattern, you will still very obedient. You still follow because market random. You know that someday you win, someday you lost. So you will maintain the same capital, $100. But if you are this kind of winning rate, 1, 2, 3, 4, on the fourth day you win, I tell you on the fifth day, your behavior will be slightly different already. What will be the difference? Yes, you will put in bigger sizes. Instead of 100, this time I try 200. Because your confidence level very high, so you put 200 instead of 100. Hey, win again, On the sixth day, what do? Maybe you put 1,000 this time. This will be the behavior in actual. Then on the seventh day, wow, still win last 6 days. Then this time you put $2,000. So lost all the way. $2,000 gone. So when you are in this kind of winning streak, it may not be very healthy actually, because your morale very high. But then you come in, you may lose all the way. That's why the people will burst the account in this kind of situation. So let's say another scenario. Let's say market don't like you. Wow, lost. First 4 days you lost, or first 4 trade you lost. Then after that, market recover. 5, 6, 7, 8, 9, 10. You continue winning 6 times. So your net result also 200, right? Your return also 10%, right? So do you think this is correct? Coming? So actually what will happen? If you lose 100, second time you lost, third time you also lost, fourth time you also lost. What will happen on the fifth day? Yeah. You reduce size, you reduce capital, or you stop trading. Fifth day, kia diu liao. Okay, very scared already. I don't put money first. I observe first. So fifth day, no trade. The market made money. Sixth day, still not convinced. I also don't put in. Observe again. Still make money. Then on the seventh day, you try again, put in. So you put in 7, 8, 9, 10, you win 4 times. On the fifth and sixth day, you don't put because you scared, observe. So you become net zero. So what I'm trying to illustrate is different experience will give you different result in mindset. That's why when you come to the first week of scenario, first type, it's very normal. This kind of scenario is the best. Will give you confidence and give you discipline that you will try continually. And you make sure that strategy will still work because it's a proven strategy over past 100 trade. It has proven it already. Past performance, of course, doesn't guarantee future performance. But if the market don't have any drastic change, this kind of pattern is the best. But then sometimes the market will have this kind of behavior. It either give you one whole streak of winning or one whole streak of losing. Although the net result after 10 trades is still the same, but your trading behavior, your pattern, your mindset will be totally different. So this is one way that why all studying and applying the same method, but may not all get the same result. This is one of the psychology or the mindset that why the trading result is different from every traders. So I have four bread and butter strategy that apply for day trading on indexes. High probability occurrence every day. Every day got opportunity one. First few minutes when the market open, I can determine already which strategy to apply. Once you learn the four bread and butter. And strategy trade execution debrief, I post it in the student premium group to enhance the learning process. So how to profit from trading? Market only move in two directions. Either you do a momentum breakup or you do a sideways consolidation mean reversal. So you only have these two type of strategy one. Either you want to do a momentum breakup strategy or you do a sideways mean reversal strategy. So if you are a scalper, you are happy finger trading one, you must have some excitement one. 5 to 10 points every trade or 5 to 10 pips. In index we call point, in forex we call pips. So 10 to 50 trades per day, and you can use a 1 minute chart M1 or M5 or M15. So if you're a day trader, that means you close position by end of the day. This one you do normally about 1 to 10 trades. You can use M15, M30 or H1. If you're a swing trader, means you carry overnight. Over more than 1 day, you can last for few days, few weeks. Then I recommend you use H1, H4 or D1. Position trader, few weeks to few months, do a D1, daily chart or weekly chart or monthly chart. So how to profit from trading? First of all, you have to identify whether it's a trend following or mean reversal. Then you look for turning point. So that is a place that you put in your trade execution. And the pattern, normally you can use a pattern like channel, flat, or double top, double bottom. Or you use indicator, moving average, parabolic, Bollinger Band, Ichimoku, Hikari, Fibonacci, pivot point, super trend, average. So there are many indicators that you can use. So first of all, let's say we want to identify, assuming that I give you two approach now, because just now I said you have either you do a trend following, a breakout one, or you do a mean reversal. So let's say now I do a trend following. I want to do a trend following, so I look for a breakout. So what is current trend? So now at this point of time, down here, okay, we are at this point of time one. So we want to predict what is the next step. We want to go long, that means we want to buy, we want to think the market is go up, or you want to sell to short, so we think the market is going down. So those people who think that want to go long, can you type long? That means you want to buy. Those things that you want to go short, you want to sell, can you type short to sell? And for the audience here, you think the market is going up, can you raise a hand? You want to buy. Okay, if you think the market is going down, you want to sell, can you raise your hand? 50-50. So this is exactly what the market happen, is 50-50. But let's say I want to trade now, and I want to do a trend following. So first I want to identify, is it an uptrend or downtrend? Because I want to do trend following. So if it's an uptrend, I will buy. If it's a downtrend, I will sell. So how to tell, is it an uptrend? From here, I look at it, it's uptrend, higher up. From here, I look at it, it's downtrend, because from here to here. So there are always two ways of looking at the market. That's why there are always a buyer and seller. So let me introduce you one way to identify trend. You use a MA200 on daily chart. Then we'll give you a potential, maybe clearer picture for you to identify trend. So let's say I draw a MA200. This is a yellow line, MA200. So if the price is above the MA200, that means this is an uptrend. So if the price below MA200, that means this is a downtrend. So now the price here above 200, this is uptrend. And the price above 200, now this is uptrend. So right down here, the price still above 200, so it will still be an uptrend. If you are trend following, that means you identify this is an uptrend. Let's say if you are doing the other way, okay, if you are doing mean reversal, that means you are contrarian, or you are looking at this is a sideways range. That means you always think that this is a sideways range. So you want to identify this is a sideways or not. Then how do you to see whether this want to go long or short if you are doing a mean reversal? So mean reversal, you look at it, also quite difficult. Then I teach you one indicator that you can use. You use a Bollinger Band. So you put in a Bollinger Band. If it's at the bottom of the Bollinger Band and reverse up, this is buying up. That means at the bottom of the Bollinger Band and the price come back. And the top of the Bollinger Band and the price come back down, you sell. And this part will fail, not all the time, but most of the time it pass. Like this one at the top of the Bollinger Band, come back down, you sell. At the bottom of the Bollinger Band, come back up, you buy. So down here, because at the top of the Bollinger Band, coming back, so you sell. So that's why different indicator will give you different type of result. It depends on whether you are doing a mean reversal trader or you are doing a momentum breakout. So even on the same chart, but different trader, you will have a different objective and you will have a different direction view. That's why you have to be very clear. What you are doing, are you doing a mean reversal or are you doing a trend following? So that makes a very different view on your entry, whether you want to go long or short. Later, then we answer. We have to go through it because there are some on the webinar. So we get carried away with the latest indicator and strategy because, as I said, you had too many indicators already. Once you put in more indicator, you will be very confused. That's why you have to be very clear what you want to do. Mean reversal or trend following. Then, can you trade without indicator? Let's say I don't want any indicator. There are actually other methods, which some of the methods I'm using, that for you to trade without indicator one. You use a currency correlation, or you use intermarket correlation, or you use some seasonal pattern, or you use a COT commitments of trader. They look at the number of open interest and or buy or sell volume, or buy or sell sentiment open interest, or CLSA feng shui. This one also very interesting. So I just go through one of it because we are in this not in this subject now. Currency correlation, which this few currency correlation and intermarket correlation, which I use very frequent. So what is currency correlation? Normally, a particular country index is very correlated to their own currency. Example like Nikkei and dollar yen, because both are from Japan. Japan Nikkei and index and Japan yen currency are quite correlated. So inversely correlated means that Nikkei is down. Okay, Nikkei is down. This part, the top of the chart here is Nikkei 225. Nikkei is down. Okay, and dollar yen is up. Because dollar yen is reverse. When dollar yen is up, it means that dollar is strong, yen is weak. Nikkei down means yen is weak. So when Nikkei is down, normally dollar yen is up. So when Nikkei is up, normally dollar yen is down. So this one, if you are able to view this one correctly, you can make some money on it. It's not really. Okay, so same thing like DAX and Euro dollar. Okay, when DAX is down, euro is down, or euro dollar is down. So when DAX is up, euro dollar is up, and Aussie, Australia index, and Aussie dollar, and Dow Jones normally you can use a dollar index, or you can also correlate it to US dollar. So let me go through how I make use of it. Just a very simple one. On quite recent, um, on the 2nd February, which is quite recent, around 9:30, there's a NFP figure, non-farm payroll. So I look at dollar yen. So at the time when the news come up, dollar yen straight away shoot up. Okay, this is a 50-minute chart. The first 50 minutes go up. Then, so normally when you trade your entry, this is the time you look at it. You let the market run for about 50 minutes, see what is the first bar form. So first bar is a very strong up bar when the news just came up. Then after that, you look at the Wall Street, Dow Jones. Different Dow Jones actually come down when the NFP figure come up. So you know something is wrong already because this is a divergent signal already. Because Dow Jones and dollar should be quite correlated. So that means when the dollar is go up, just now when the dollar is up, but Dow Jones is down. So how you make use of it is when the divergence happen. So this is the time that I look at it, the divergence happen already. So you wait for some small reversal come out already. So that is the point I started to make some entry down here because I know something is not right. Of course, you also have to go through intermarket correlation. So you have to be very careful when you apply this. You also have to look at what other market reacting to it. What is German DAX reacting to it? What is Nasdaq reacting to it? What is Nikkei reacting to it? And what other index like Hang Seng and China? So all this index is called intermarket correlation. So you look at it, something is not right. So then you do a buy because you know that dollar yen move up is in the correct direction. So this is the time that the market suddenly wake up already. They know they are wrong already. Start to follow. And the best part is dollar yen didn't come down. It still continue to move up. Then you know that you are in the correct direction. So your buy here is very safe already. And in fact, it did move up continuously already, all the way. So this is one way how you make use of currency correlation. So how to profit from trading? Always remember, we want to start trading is we want to do a very simple one. We always start with the most basic step. What is the most basic step? Means that we want to look at start from a very clean chart. Very clean chart means that we look at the chart purely on the price only, without anything, without any drawing, without any indicator. Then you look for turning point. Turning point means that the key support and resistance. So it can be breakout, or it can be a reversal point. So let's go into detail. You must have a trading plan before you start entering any trade and trade your plan. Identify whether it's a price continuation or reversal. Have a realistic profit target. Because if you are doing day trading, your target profit is smaller. Versus your swing trading, your profit target is bigger. Of course, your stop loss relatively, you also have to be bigger. You can have multiple entries with trailing stop and have a trading journal to review the trading result. Timing is everything. Be patient. Only index have opening and closing time. So I will share with you what are the 4 steps I do for day trading. Step 1, identify key level support and resistance and place pending order. Step 2, place pending order. Step 3, conservative approach. And step 4, position sizing. So step one, we look at it. Normally, I want to identify what is a high probability turning point. Means that what is the key level support and resistance. So again, down here, we want to identify where are the level of support and resistance. So what you do is on the chart here, you look left. You look at the left. That means from the chart here, you look left. Now here you can see something. The nearest one, okay, this is a first level of resistance. Look left again here. Look left some more here. Then you look at the support here. Look left again down here. Okay, let me try to circle it. So from here, when you're at this point, you look left. Your first resistance is down here. Your first support is down here. The lowest point is a support. The first lowest point that you can find. And the first highest point you can find is a resistance. Then you look left again. This is another point. This is another support here. The same place here doesn't make any, not much meaning down here. Okay, because this is not the highest point, not the highest resistance. So you identify which is one level of resistance is here, second level of resistance is here, first support is down here, second support is down here. So this will become your support. I call it S1, first support. Second support, S2. Then you look, again, always look left. Okay, this is your first resistance, R1. And look left again. The second highest point here, R2. So to me, if you look at the two level of support, is good enough. Two level of resistance and two level of support. The most closest to the price level. Unless you are very professional, then you look at level 3, level 4. Otherwise, two level of support and two level of resistance is good enough for day trading. Then step 2, after you identify already, step 2, avoid market execution. Unless you are very, very professional already, then you do market execution. Otherwise, you will always hypnotized by the market. When you look at the price too closely and too near, you will make wrong judgment. So try to put pending order. It's free to use pending order, especially when you are new. Try to learn to put pending order. Then, what are the pending order that you can put? Sell limit, buy limit, sell stop, and buy stop. Usually, these are the 4 limit orders that you can put in. So, as a novice trader, a very basic step is you already identified 2 level of resistance, right? So you put your sell limit at R1 down here, and second sell limit at R2, and the first buy limit at S1, second buy limit at S2. So every day you go in the market, you identify 2 level of support and 2 level of resistance. Then you put 2 sell limit and 2 buy limit. That's all you need to do as intraday trader. So step 1, you identify 2 level of support and resistance. Step 2, you put in 2 limit order, 2 limit buy order, and 2 limit sell order. Clear? Can? Clear? You put a yes. Yes. Then I proceed to the next step. Yes? Clear enough? Okay. So let me tell you why 50% of traders fail. Because they only learn 50% of pending order. So just now I show you, right? 2 buy limit and 2 sell limit. It's only the first 50%. The other 50%, sell stop and buy stop, is the other most important part of the pending order in trading, which a lot of traders didn't come to this part. So that's why trading is very important, because second part is actually more important than the first part. Let me illustrate. The second part of the pending order, sell stop and buy stop, I call it conservative approach. So conservative approach means that you wait for market to U-turn, then you enter the order. This part a little bit tricky, not as easy. Let me try to illustrate. Let's say the market come down here. Okay, the market coming down, and then the market make a U-turn. So if you put a buy, when the market come down, you put a buy here. Your buy level at A, and your buy level at D. So A and D is the same price. So if you put a buy level at B and you buy level at C, B and C also at the same price. Okay. A and D is the same price. B and C is the same price. But buy at C and D here is better off versus buy at A and B. Because A and B is against the trend, because the market is coming down, you buy. Whereas this part, when the market U-turn, then you buy C and D. It follows the trend. Let's look at the chart easier. Okay, the market coming down. Okay, so you put a buy here, and the market going down, you put a buy B. Then the market go up, you do a buy C and D. So what is the difference here? Let me tell you, when the market is here, right? When the market just come down here. So as we mentioned, you put two buy limit, right? So you put a buy limit at A here. When the market is here, you put a buy limit at A. You put a lower level. So when the market drop a bit here to here, you're quite happy, right? You buy at a lower price. Happy in how? Because just now so high, now so here. Wow, trigger, you're quite happy already. Now you get into the market. The market bounce up a bit. Very happy, you bought at a lower price. But then the market keep coming down. Buy at A one also happy, right? But it's okay. You got second limit, I tell you put two limit, Okay. Buy at limit B. Never mind. My kia, we scared, because I got two level, So buy at B. Better price, average up. Hey, the market keep coming down. When the market come to here, how will we feel? Not so happy already. I don't think everyone will be happy. Not so happy already. Even you bought at a lower price at B and C versus just now at the price here. But then when you are here, you already bought at A and B, but then the price dropped to here. Which means that your both position, you're losing money already. So not happy already. Right? Everyone not so happy. Then market bounce up, okay. Then the market coming down again. I tell you, when the market is here, 50% of the trader will go and cut already. Because you don't know how far the market is going down some more. You thought the market is going down. Because it becomes like, this is become a resistance level already. The market cannot go up some more already, going down. So 50% of trader would have cut the position already. But then, if you are here, I tell you, you buy at C and D. That means you wait for market U-turn up, then you buy. I bought at the same price, I did not buy at B, but I buy at C. It's the same price as B, When the market bounce out, then I buy. But I pay a higher price, versus just now the price here I didn't get in. But now I pay a higher price. Then the market go further up to D. I buy some more. Same price as A, But then now here, I pay a higher price versus C and this lowest point here. But then after that, the market keep going up. So this is called the conservative approach. When the market down here, then you put a buy stop at C and a buy stop at D. You don't put a buy limit at A and B. Okay. A and B, this is a buy limit. When the market drop to here, then you put a C and D buy stop. So this is a very different part. That's why I say 50% of trader, you only learn this part, buy limit. But I hope that all of you attended my seminar here, you have learned the second part here called a buy stop order. And when do you execute a buy stop? You can only put in your buy stop when the price is down here. That means you got to put in your buy stop at a higher level entry. When your price is here, you can never put a buy stop here. You can only put a buy limit at this level. So you can only put in your buy stop when the price drops to here. So this is a different psychology already. But this is the part that you can actually make money, which is why 50% of the traders cannot make money. It's because of the psychology down here. So learn to become a conservative trader. You only do a conservative approach when the price started to recover. And you only do a buy stop when the price get back above up. Okay, recap. Want to do this exercise one more time. This time give you slightly different scenario. One more time. Recap 1 to 3. Step 1 to 3. Step 1, identify key level of support and resistance. So let's say the price move until here. So we want to look for support and resistance, right? So you want to try to draw here. 1. Okay, this is your first level of resistance, second level of resistance. So identify 2 levels of support and 2 levels of resistance. Then place pending order, whether you want to do a buy limit, sell limit, or sell stop. Then conservative approach, you put a sell stop. Aggressive one, normal one, you put a sell limit. So with the above step 1 to 3, you can have a very powerful day trading strategy already. So identify 2 key levels of support and resistance within S1, S2, and 2 key levels of resistance R1, R2. Place pending order, buy limit, sell limit. Conservative approach, play buy stop, sell stop. Now I share with you 2 strategies. Okay. First one, day trading strategy. Identify 2 key levels of support S1 and S2. 2 key level of resistance R1, R2. First strategy, which I shared earlier, you put 2 buy limit S1, S2, and 2 sell limit R1, R2. So you put sell limit here, 2 sell limit here, R1, R2, buy limit S1, S2. So this is first strategy. Every day you go into the market, you identify 2 levels of resistance and 2 levels of support. Then you put 2 buy limit order and 2 sell limit order at S1, S2, R1, R2. First strategy. Okay. You go into the market, look for 2 levels of support, put in 2 pending order. 2 pending buy order and 2 pending sell order. So strategy number 1. Second strategy, called conservative day trading strategy. So same thing, you identify 2 levels of support. This one cannot skip one. Always look for 2 levels of support and resistance. But then this time you put different thing. You assume the market will break the first R1, the first level of resistance. That means you are going to put a buy stop here. When the market is here, you put a buy stop down here. above R1. So you assume the market will break R1 and you put a sell limit at R2. Below, you put a sell stop at S1 and you put a buy limit at S2. So this is strategy number 2. Sorry? Yeah, day trade. So you see the slightly different. This one you assume that you always break the first level. So you put a buy stop and sell stop at the first level. And you only put the sell limit and buy limit at the second level. So every day you only do either conservative day approach or normal strategy day approach. Can this strategy good or not? Good. Put a yes for me. Yes. Good. Learn something. Yes. Good. Can apply already tomorrow. Okay. Give you one more step. Step 4. Step 4. So fine tuning before you go to step 4. You can have multiple profit target or trailing stop. Just now I didn't mention where's your profit target and trailing stop. So your first, if you have multiple entry, at least you have 2 entry. So your first profit target, you take 50% of position. And no preset profit target for your second entry, but via trailing stop. To take profit and protect remaining position. So we go to step 4. Step 4 is position sizing already. So this part only comes to experienced trader. You identify market trend direction, double your lot size in favor of a trend direction. That means you identify, let's say today is an uptrend. Okay? So for those buy limit order, you double the lot size. That means you buy 2 lots. And those sell limit order, because you know today is an uptrend, you try to sell less. You sell half the lot size or 1 lot. So this is what I mean. In favor of market trend direction, you double the lot size. And add on when you are winning. This one is on the swing trading. So let's say yesterday you do a buy and today market is continue to go up. So you buy again. Holding on yesterday buy, today buy again. So add on when you're winning. This is easier on the swing trading. On intraday, to add on a bit more difficult. Intraday, try to take and go or via trailing stop. And half the lot size for counter trend direction. Double the lot size for trading strategy that works for you. This one, that's why you need a trading journal to identify whether the trading strategy works for you. If it works for you well, okay, double the lot size. Half the lot size trading strategy, not as profitable because you are still not so sure whether the strategy doesn't work. And abort the strategy, after you confirm, consistently fail most of the time for you. Just abort. Don't use it anymore. Simple as that. So putting it together, have a trading plan and with an edge. Plan the trade and trade the plan. Always use pending order. Try not to use market execution because it's quite easy. You look at the price, you hit buy and sell. But normally when you do that, unless you are very experienced and you are very seasoned scalper, otherwise over long term cannot make good money. And trading journal and review it, double the lot size on profitable strategy and half the lot size on drawdown strategy. And this part, make it a habit to do at least a monthly withdrawal. Try weekly or monthly withdrawal. Weekly a bit tough for new trader, but at least try to do a monthly withdrawal. $100 also good. Try to make a habit. At least every month must withdraw some money. Don't make it a piggy bank, only go in, never come out. So you must have a habit. Every month must withdraw some money. Whether you win or loss. If you lost minimum, also must withdraw something out. Then it will become a habit one. This one I tell you, I know very well. If you don't make it a habit to withdraw, after a while the money cannot come out anymore already. Last but not least, do not try to follow tips, including whatever tips I tell you, don't follow. You must test it, make sure it works for you. And you must enjoy doing it and not make it a burden to do it. If you find it's already become a burden, stop trading already. Stop doing it. Do other things. Consistency actually is everything. So I share a little bit how you start trading. How many are new trader? If you are new, can you type new? How many are new trader? All season already, Wow, all very seasoned trader. Only one or two new trader. Okay, the rest are seasoned trader. Anyway, I just go through what is a step that I recommend to start trading. You read trading books, okay, or learn yourself through free online resources. Like IG has an online academy, or you can learn a lot of trading module, and that is quite useful. I recommend a lot of my students to go through that because that resources is quite uh, give you an edge to help you to go shorten your learning curve. Or next step, you open a broker account. Try to have some demo first or micro lot size. Okay, start learning process first with at least 100 trade or 3 months before you increase the capital and lot size. Try to do demo, if not do very small amount that you find is negligible to you, whether 1,000, 100, because everyone have different capital risk profile. Some, like I say, I put in 100,000 is a small amount to me. Some 1,000 are very big already. Some can only afford 100. So put in a very small amount you want to test the water. Or just go for micro lot size, demo account. A lot of broker give you demo account to try. Try at least 100 trades on the same strategy that you are learning, or 3 months before you increase the capital lot size. Or sign up some mentorship program, okay, with proper guidance if you're totally new. Join some trading community, learn some strategy to apply daily. So if you are still confused, then go for feng shui. Go for feng shui. I show you the Hansing. This one very applicable to Hansing. You go to clsa.com. Look at last year one. We talk about very near one. Last year from November, if you trade, how many trade Hansing? HS, can you type HS? How many trade Hansing here? Wow, nobody say Hansing. Serious. Okay, okay, never mind. I show you. So what they say is from November onward, it's on the downtrend. Indeed, it is a downtrend in December until mid-January. Very jialat, all the way down. So if you follow Hong Sui, go and sell in mid-November, all the way hold until mid-January in good profit. Last year already. Want to see this year or not? Yes, yes, okay. Want to see this year? Type yes. Nobody. Okay. Yes, okay, yes. See this year what happened. Okay. Wow, this year now February will be down all the way until early March. But early March can start buying already. Coming soon, right? Early March only how 2 more weeks, right? 2 more weeks, early March already. 2 more weeks. Hold your horse first. 2 more weeks later, start buying. Wow, 水水 liao all the way. Very, very hold liao all the way. Tomorrow I don't know. But based on last year, to certain extent, don't follow tips. The one I told you already. If you want to do your own due diligence. Okay, put some trailing stock, put in small capital, test the water. Okay, in your favor, protect your position. So if you want to contact me, this is my website, my contact, my Telegram, my YouTube channel.